It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
All right, I think we are live.
Hello, everyone.
Maybe
Thank you, Lamba, for having me.
Yeah, maybe start a little bit of your original story. I don't know. Do you want to start origin story on your trading side or the hentai art like setting for Twitter?
Yeah, so I've been on Twitter longer than I've been in crypto. So always been fan of anime manga for several years. So when I joined crypto, I didn't see any reason to change my style and my likes, my aesthetic. I joined crypto in the DeFi wave after the COVID break, basically when everyone was home and I was also working from home. We all had disposable income, and I mean, coins were exploding left and right. So I heard from my colleagues that they were trying to trade some crypto. I said, okay, sure, I will do it myself. Started on chain, immediately on chain. The time Solana wasn't super big on chain yet. I started actually in chains like Binance Chain and Ethereum mainnet. There was some NFTs, there was some meme coins. That's it. Then at some point I discovered Perps, started trading also on leverage. I don't recommend it to most people. So I would say actually, overall, I actually think I still made most of my profits on chain, but I still trade Perps just because for the adrenaline of it, for the thrill of, when you hit trade big, that there's not much that can replace that feeling. So we keep
100%.
doing it.
Hey, out of 100%, how many percent of your gains you think is from like you farming on chain, memes, perks? Like if you were to divide it like briefly.
Well, I would say historically is closer to maybe 50-60% on chain. I would say this year I haven't been super active on chain. So for 2025, mostly I've been trading Perps. The bulk of the activity that I did, the volume has been trading futures and trading perpetuals. I haven't actually been farming much. I even miss large airdrops like Hyperliquid, or probably I will not make anything from like Lighter and stuff. So I'm received some smaller ones. I got some Monad. I got some. Probably will hit some other dexes when they go live with when the points will finally become some airdrops. But I'm not actively farming. I just do my trading, and if there is a new platform, I test it, I try, I do some volume, and every now and then I get some thank you bag. That's it.
Yeah, I think we're pretty similar on that sense. Hey, if you were to profile yourself as a style of a perk trader, what types of style are you?
A gambler. No, I'm joking. No, I would say I trade mostly intraday. I trade on Perps with the hourly and 4-hour candles. Nothing complicated. I mostly just trade like price action, horizontal levels, maybe a couple of MAs for confluence, but more or less just pure price action. I spent some year or two in the past learning order flow, so like micro time frame price action and really like trading with the exo charts open and stuff. After a while, I think you can kind of internalize this stuff. So right now, I just keep a simple candle chart open, and you can kind of see this stuff happening even if you don't have the flows open. You can kind of see if there is a week, if someone gets absorbed, if something look like distribution. This stuff after a while you like internalize it. So the chart that I look at now, it's very simple. I don't have much indicators and things on screen.
Interesting. How did you come to the conclusion that you believe in this style actually? Because like there's many style of trading, right? There's like information driven, TA, fundamental, and TA there's different type of like maybe ICT, VCP, all those types. But like why did you pick this? Did you have a mentor, or was it like after testing like 10, 20 different ones, this was the one that vibes with you?
Yeah, actually, it's thanks to some of my friends in CT and outside of CT. For example, my good friend DeltaXBT, which I recommend many people to follow. I was trading on much lower time frames. I was trading on like 5 minutes chart, 15 minutes chart, maximum 1 hour chart. And I noticed that I was decent at scalping lower time frame, but then I would often miss the big moves because I was too much zoom in and just trying to scalp 10-15% profits, and then miss maybe a big move that would develop over like several days. A coin will suddenly become the coin of the week, and that keep just pumping and pumping and pumping, and maybe you are just scalping little moves and miss the big picture. So talking with Delta, talking with other friends, saying, I have this problem. I make some money, but then I miss the big gains and the stuff. And these people told me, try to play with the longer time frame. Try to zoom out and try to take trades that maybe you're in a couple days, or maybe in the same day, but you don't close 15 minutes later. Maybe you close 2-3 hours later and see how it goes. I noticed that it was working, so slowly I pivot all my trading to longer time frame, and I think it paid well.
So are you a discretionary trader or more like a systematic trader? Like do you have
Absolutely 100% discretionary. I don't have like a system or like edge or like back testing and such. I just look at the chart. I just look at recent price action and just but like just take educated guesses as I want to have some action at this level, and this is my invalidation, and this is my target. And if the trade goes well, goes well. If it goes bad, I get stopped, and that's it. I don't have like a systematic edge that says, oh, I want to arb these conditions, or like I see some inefficiency between exchanges. I'm not complicated. I am actually very, very simple in my trading.
Oh, okay.
Like directional trading, pure and simple.
Okay. Someone in the live chat is asking, do you play off sentiment? I'm guessing his question is, do you play off sentiment, or how do you define, or is there what other core factors other than flow that affects your discretionary?
So the answer, it's actually a good question. I have my watch list, which is constantly shuffling between the coins of which are hot, the coins of the week. Let's say, for example, right now my attention is, for example, ZCash, FARTCOIN, coins which I have a lot of attention, a lot of eyes, no? I'm not trading, for example, right now coins like Sui or whatever, which maybe was hot months ago, and maybe now it's not interesting to me. So I choose some coins to watch, which have a lot of sentiment, a lot of attention, and then on those I focus only on the chart. Like I try to see, okay, this is a coin which has, in the top 10 of volume all week. How the chart looks, where I want to enter, where I want to exit, and so on.
Okay, so
it's a mix. It's a mix of TA, but on coins which have a lot of attention in the moment.
Okay, so personally, I use Velo. I use Velo to filter out through like change of the change of OI or the volume, and then maybe in whatever cap, and then obviously with some Twitter sentiment to build my watch list. If I were like, do you have like a system, or is more like you have group chats, or you have like you just keep on adding names and taking names out as the strength goes out?
Yeah, it's mostly Twitter and Telegram for me. It is. I have some. I'm grateful to be in some group chats of friends who keep me more or less informed of the active coins of the week, and a mix of Twitter lists that I built over the years. So I just follow, people who maybe specialize on Solana coins, people who are just, very early to new chains, things like this. So I try to be, when I see a confluence, when I see the people talking the same coins, both on Telegram and on Twitter, I think, okay, and maybe they are, like top volume on Hyperliquid. I think, okay, this is where I want to be. This is what I want to trade this week.
Do you form thesis and try to size into it, or do you just trade intervals based on strength and flow?
More the latter, yes. I feel that when I try to build a thesis for myself, I kind of then become a bit too much blind to reality. I try to bias myself and say, I don't know. Let's say, for example, a recent narrative, there's been Hyperliquid unlocks. And half my timelines were saying it doesn't matter, and half my timelines say hype will be heavy, it will trade bad because there is unlocks and such. I try not to be biased too much by narrative, because then it clouds your judgment. Then it distracts you from the simple reality of the chart. And the chart of Hyperliquid says that it was, for example, going to lose $30, which was a very important psychological level. If it loses $30, for example, it doesn't make sense to catch knife at 28 because maybe it's going to 26, 23. This is the only thing that matters to me. It doesn't matter if the team is selling, if people are FUDing, if people are catching knife, if some whale with $5 million is opening longs. I don't want to know that. I just look at the chart and say, this is what I want to do.
Interesting. Okay. What is your risk management looks like in the level that you hope to be and in practical level?
My risk management is a bit particular because I tend to trade without hard stop losses, and my own risk management is to simply deposit on exchanges partially my margins. I try to, first of all, I trade cross, and I usually don't have many positions at once. I have one, maximum two positions. So I know that my margin is my basically wallet, kind of my exchange amount. And I have invalidations in mind, but I don't put a stop there because I know that prices maybe can weaken then bounce or something like this. So I kind of try to watch it myself and stop manually from trades. It's not a system that I recommend to many people, and it's not a system that works on Black Swan days, like the 10th of October, stuff like that. Yeah, for example, I got stops like that day. FARTCOIN went to like 8 cents in 2 hours. So in days like this, you cannot just rely on your hand to click fast. You're just fucked. But when it goes well, it goes well. Like when the times are good, it's a system that I find that pays me off well. The other part of risk management is for me to constantly withdraw profit. So if I have, let's say, 100 on an account and I trade for a week and it goes to 120, I don't try to make it 150 or 200 next week. I just withdraw the 20 and start a new week with a fresh account. So it's all profit that you cannot give back. I think if you leave it on the account, you are always at risk of giving it back. But if you take it out, it's your profit. It's your, you do what you want. You cash it to the bank, you put it on chain, whatever. People can do what they want, but it's out of the system. It's not money you can gamble again.
Okay, so what is your process in deciding when to cut something, like stop loss or take profit? Then, if you don't, like is it based on other indicators or flows or not? I guess
No,
it's
no.
not just
So before taking a trade, you still have the invalidation in place.
Ah.
So let's say I say, no, I want to enter position at 92 on Bitcoin and I'm wrong at 88, and my target is 96, for example. No, just to throw some numbers. I still have my invalidation at 88 before taking the trades. I just don't put a stop in place just in case, it's just a week and then it goes up again or something like this, or like liquidity shenanigans. But I have my own invalidation. So if we close 4-hour candle below 88, I'm out. There still need to be a level where you are wrong, in my opinion.
Understood. So what does a typical trading day look like to you? What's your routine?
My routine? Well,
other than reading hentais.
I have some favorite session. I prefer to open position. So first of all, I don't sit down with the plans. Like more or less, I try to start every morning with a fresh mindset and saying, okay, mostly, first of all, I try not to sleep with open position. So I try to treat each day as separate. So I usually start without open positions in the morning. I'm based in Europe, so for me, the morning session is when US market is still closed. I tend to favor this session for opening trades and then trying to manage them into US open and see if, maybe a day is a trending day or is a choppy day, and so on and so on. And then as I said, I try to not keep positions open too long because I noticed that, again, because people maybe don't log their trades, but if you log your trades and then you do some statistics on them, you notice that, for example, if my trades go well, they usually go well in a few hours. And if they are still open many hours later, usually it's a bad sign and usually these don't turn profitable. So I try not to, for example, keep trades open if they haven't gone where I want by the end of the day. I just need to close them probably because it means that it doesn't happen that day. Things like this. So I try to treat every trading day as a working day, basically. When you're done, you clock out, you go home, let's say, and then next day you start fresh from a flat position.
How do you lock your trades? Because like a lot of people maybe sometimes lock too much, sometimes they don't lock too much. Like for me, I lock it daily. Like I just do some pins and then I write something out daily. But like I don't think it's that effective for me. Maybe because I like to use a pad. I don't write it out and so I actually don't know how long I hold the positions until I check my Bybit analysis stuff. But yeah, love to know like what's your table like to all your system to log your trades.
Oh yeah, so I use actually automatic tools like TradeStream to log trades with API, and then so they are automatically doing some kind of statistics for me, and then I try to do a review weekly, usually in the weekend, and try to figure out what went right, what went wrong, what's emerging, for example, from my patterns and stuff. I should say by now I have a good enough picture of understanding what works for me and what doesn't, where I need to improve and where instead it's going okay. So I don't do it like religiously much anymore, but it's been very useful for me to analyze in the past how stuff was working against me, or how maybe I was keeping making the same mistakes, for example. So how to fix that, I think, is very useful for people to log their trades.
Sorry, just to ask you a little bit more. I never use TradeStream. How does that work? It automatically tracks all your trades, but like it doesn't tell it. It doesn't have a place to tell you how do you feel, why did you take the trade, those kind of stuff, right? Or do you add them on after?
You can add the manual notes to them, so you can write in a single trade like the reason you took them or how you felt at the moment and such, so you can come back later to it. But regarding, for example, statistic, it tells you, for example, average duration of your trade, average duration of your profitable trade, average duration of your losses, or like, for example, the drawdown that, for example, it tell you some important information, like if your trade goes more than 60% against you, for example, 99% of those never recover and they always become losers. Just making an example. So you already know, for example, statistically that you shouldn't hope anymore for a break even for those trades, because statistically they always become losers, for example. So you can just cut them. Stuff like this, like tell you, for example, also that maybe if you go over certain size, for example, they become more difficult for you to manage, maybe mentally or whatever. Maybe it tells you that, for example, if you keep them under a certain size, you're more profitable, just because maybe you're more relaxed or whatever. Like, I mean, this is conclusion you need to take yourself, but it just show you the numbers, just show you the statistics.
I have a trade
There are
journal.
other tools. I'm not necessarily recommending one over the others, but I just started with that one, and it works for me both with Bybit and Hyperliquid, so I just used it.
Nice. In the live chat, Ton Berry is asking that, what do you do if your position doesn't hit your target before end of day?
Yeah, so this is a conclusion that I usually need to take in the evening, and sometimes if I'm in profit, sometimes I just put a stop loss in profit and just keep it open and see if I reach target overnight. Most of the time I just close it instead wherever I am, and just thinking, because mostly my ideas have a time invalidation. Like if it didn't happen, if I took a trade 6 hours ago and I had a target but it still didn't happen, most probably I wasn't right on the momentum. So I like to trade charts which have momentum, which has some sort of like push, some sort of trending. So if it's not happening, if it's stalling for the whole day, maybe I was wrong on judging momentum. So it's good to close.
Okay, let's talk about current market view. What do you what's your read on the current market structure right now?
I would say if we take it from a zoom out perspective, I would say people can disagree, but technically I believe we are already in a bear market. I think that it doesn't really matter right now if in 2026 Bitcoin will do new heights or not. I still think there is a matter of fact that we reached 125k and now we are struggling on 90, so we are down kind of 25% from the top, and the altcoins are destroyed. On-chain activity, its important signal is completely flat, almost dead. Like there is no runners going, to 100 million in a day and such. It's a different vibe in the market. Doesn't matter that. I mean, we always have outlier. Okay, ZCash, went like 10x, in a month and a half. Okay, great, but it's different. Like, yes, single coins can run, but the whole market, in my opinion, is in a cooling down stage. And we see it also with the large coins, which I have like ETF. They are not buying right now. I also think that in general, crypto not being the number one choice for online casino anymore. I believe that a lot of this stuff has been taken by easier access for people to, for example, trade stocks without being through a broker. They're using Robinhood, they're using other tools which make people feel they are trading something more grounded. If you're trading Tesla stock, if you're trading Nvidia stock, Google, like, yes, you can still lose money, but you feel you're gambling on something which is more real than just numbers, like Bitcoin or like stuff which maybe didn't have for them a great reputation. So If a guy has 5K of saving from his own job and wants to gamble them on the stock market, right now it's much easier for them to deposit on some stupid app on their phone and just trade the stocks rather than, depositing on crypto, opening a wallet, going through exchange, withdraw, learn about gas, learn about perpetuals, learn about funding, all this shit, They can just go to Robinhood and pick Nvidia and be up 10x in 1 year, no? It's a bit different. And plus, I think prediction market and sports betting online, of course, exploded much more. So, if people are gambling on next mayor election or sports bets, I mean, it's all money that's not going to crypto, in my opinion. It's all crypto is competing with the same eyes and the same money, which is now gambling in other places. So they're not going to buy the next WIF. They're not going to buy the next FARTCOIN if they are just buying Nvidia stocks. It's a bit difficult. I think, of course, I don't think like Bitcoin is over, but I feel that, for example, on-chain coins right now are not super attractive to a new audience, to people who haven't been onboarded yet. I don't think in this cycle we onboarded many new people. I think it's the same people who will keep gambling the same money.
100%. It's just pure PvP. What narrative? Actually, what are you trading right now or looking to trade?
So right now I am seeking to except Bitcoin and ETH, I'm just trading ZEC, FARTCOIN, and Hyperliquid. I don't see much of interest outside of that. There is some coins which show some sign of bottoming, like Pengu, for example. But again, I like to trade coins which have a lot of attention and a lot of momentum. I think ZEC is showing a very nice bottom signal. I think FARTCOIN is up 2x from the bottom, kind of. And Hyperliquid still, of course, has a lot of attention, and it's around a very interesting level for me. So, I mean, these are the three coins that right now are attracting me to trade. For the rest, yeah.
Would you mind if I share a screen of like maybe Binance or something of ZAC, and then you can talk us through how you are viewing this or something?
Sure. Okay.
Fuck, it's okay. What kind of stuff are you looking at and stuff then from here? This is ZAC.
Yeah. So I would start. Let's go to the 4-hour daily chart, for example, because that's kind of more visible. So so that if you see from like the past weeks, ZAC was in a kind of a downtrend from 750 all the way to more or less lost kind of 50% of the value. As you say, it was in a clear downtrend pattern, like lower highs, lower lows, lower highs, lower lows. Now, if you had like the patience, for example, to wait, like for example, people are constantly hoping for V reversal. They want a V shape now, but we have this kind of W now. We have this kind of inverse McDonald pattern. So it's kind of like a double bottom, kind of double. Like it tried to bounce once, then it kind of retested more or less, and you could argue if it made a higher low or kind of its same low, but more or less from a really zoom out perspective, it's kind of like a double bottom. And usually this type of charts don't like reverse immediately, like vertically, but it's a sign that there is not much strength to push much lower. So as you see, like if you trace, for example, a diagonal over the diamond trend, we see that after the second kind of bottom, now we are kind of breaking out from this diagonal. I think it looks good. I think it looks like, especially it didn't lose, in my opinion, too much attention on the timeline. Like it's still a talking point. enough, or maybe my timeline is completely flooded by Mert and other people who
Yeah.
talk about Zec all day. But yeah, kind of looks good. Like it still have a lot of attention. It's doing good volume. Like still kind of in a top 10 volume coins on many exchanges. So, I'm kind of interested in from a again 4-hour perspective. I'm not trying to catch here like small moves. I of course today maybe it's FOMC day, so I don't think it's the best day to enter a position. But like if one has a patience, I think around here, around 400 maximum low, we can retest, and then I think it will start to make a new uptrend. Of course, this is all dependent on Bitcoin not shit in the bed, but if you consider that this coin went 10x from the basically from nothing, meanwhile Bitcoin was making lowers and lowers, so it's not necessarily going to be dependent on Bitcoin chart. It can go on a second leg on its own.
Yeah,
and
for
actually sure. It's of course it's a different magnitude, but for example, if you take the FARTCOIN chart from like when it went to 260 the first time, and you compare it, let's put it for example on the daily. If you see the first leg, okay, zoom out a little more, just so out. Okay, if you see, it makes this kind of like double bottom and then makes a new leg. So it's kind of like it's a pattern that you can kind of trust. If you go to the left, like you see where you have this kind of valley, it makes a first attempt and then it kind of round up again and then goes up. So it's a pattern that very often you can kind of feel it can generate a new leg up.
Mm-mm.
Again, it's stuff that maybe if you're trading on the 15 minutes chart, there is a lot of noise, there is a lot of overlapping scene, overlapping confusion that you don't know. Are we ranging? Are we chopping? Are we going sideways? If you zoom out, you see a much clearer picture. The downside of the zooming out is that you need a much wider invalidation. You need to give a lot of breathing space to your position. Also, you're not stopped if we move 2-3% lower. You need to just be comfortable. Or you trade spot and then you just wait. Or you take low leverage position and just let them run slowly.
How do you read the volume in this? Like, are you so I actually like the ZEC chart a little bit more, just because the 4-hour chart, the volume is lowering and it's at the turning point. Typically I would look out for these, and because I think like the buy and sell is exhausting, so it might break out or it might go down, and I typically like to take a gamble on the like I would take a gamble if it go up and in a short but like how would you read the volume in the FARTCOIN chart just now? Because it's something where like you said, right, I can't tell where it go flat or the volume doesn't show much. It's if that makes sense.
I mean, yeah, you could argue of a bit of a RSI divergence. You could argue that maybe volume is tapering down. Meanwhile, the chart is trying to grind up. Other hand, I mean, there is some kind of bit of seasonal, in my opinion, consideration. It's like we're entering Christmas, so in general, December is going to be a lower volume month. So I don't think it's really super fair to compare it to a couple weeks ago, for example, action. So yeah, from a technical standpoint, you could say that maybe volume is taping off. So maybe it doesn't have much fuel to sustain a new rally. But on the other hand, I mean, I don't know, I think by looking at the chart alone, ignoring a little the volume, which could be a bit seasonal stuff, I think it looks good.
Okay.
I think it can go even to the lower 30s, maybe 32, 33, and still look quite good.
What about on hype? What do you think about hype?
Yeah, but hype, as I said, so as soon as it lost 30, I became a bit disinterested to trade it until I think it needs to revisit the low 20s. I don't know if it will be or if I will just get sidelined in case it regains 30 and goes 32, 33, then it can look good again. But as long as it stays under 30 with like 4-hour daily chart, I think it should revisit lower 20s to maybe build a new base, maybe find new buyers. I mean, you must understand that this coin went to 60. So if someone bought near the highs, it's down 50%. And if people bought low and they were very much up, now they anyway round trip 50% of their profits. So there is a lot of people who cannot wait to get out, in my opinion, still at this 30 level. So I don't trust any pump on Hyperliquid if it doesn't revisit the low 20s. I don't trust it long term. I think it needs to go lower, find new buyers who think they are making a great deal, and then maybe pump to a new leg. I don't know if I make any sense. I mean, I could be wrong on everything. Just how I see things.
I don't know. That's why we like to chat, right? Like, is to see everyone's view and you take your own judgment from there. Okay, let's talk about your biggest win.
Biggest win, actually, fun enough, was some years ago. I think it was still 2021. There was a lot of coins launching on how it was Copper launch, something like
Yes.
They're basically coins were doing TG there, and all the single coins were doing the same bloody pattern. They were listing, then there was some kind of mechanic, some weights, like it was like a Dutch auction or something like this, and they would go low, 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 and then there would be a point where to bottom, and then the last 6 hours of the auction would pump. And I swear I was I basically took my whole spot capital at that time, put it in every single coin in the same exact trade, like in the same pattern. I was like doing, okay, this coin is bottom, put my whole stack there. It was completely degen, but it was a lot of fun at the time because they were really exactly doing the same pattern. So I was buying the coin, it would pump the last 6 hours of the auction, I would sell immediately. 2-3 days later, new auction, I would do the exact same. I basically took my whole spot stack and multiplied like 6 times in like 6 coins. So
let's go.
It was just it was not a single trade, but it was almost the same trade, like completely repeatable alpha, basically. And I was telling all my friends, I was saying, there is a new auction, just enter at this point and just, sell it 4 hours later. And it's free money. It really was free money.
Nice. What about your biggest loss then?
Biggest loss, actually, I would say, well, I think it was in FARTCOIN actually earlier this year. Surprisingly, it was in spot. I did some decent gains in FARTCOIN on the first pump. Then I decided to re-enter in a classic way, re-enter around the top. No, not really around the top. It topped at around $260. And I re-enter when it lost $2. So I thought, okay, great. Now, I can just read it back to a new highs. And FARTCOIN went all the way down to like 32 cents before pumping again. At some point, I kind of gave up on it. And I decided to take a big loss. It was spot, so I was like, waiting and waiting and waiting. Of course, even on spot, one should have an invalidation, but I was like, nah, it's coming back. And then it came back, and then I got my revenge, but it was much later. Like, first I took a big loss, and then I was managed to trade again when it started pumping again. But yeah, it was a bit painful.
What did you learn from it?
Yeah, I learned that I need to treat my spot position not much differently from my perp position. It's not because it's spot I can allow it to go down 50-60%. So it's like a lot of
100%.
people treat spot as there is no
It's
invalidation.
nothing.
You still need to know
Yes.
where you're wrong even on spot.
What's your biggest liquidation?
Biggest liquidation. I don't know. I think it was maybe 6 figures on Bybit around last year. I don't know. As I said, usually I treat my account on cross margins, so it was probably some single position who managed to use the whole account margin and got wiped in one day. Yeah, it
GG, bro.
happens.
Yeah. It's true. All right. Let's go a little bit more in educational direction. If someone were to start, I didn't came from technical background, right? Like I don't really believe in TA till well still, but like I use TA to find a better enter exit. But like I've been more interested in it this year or so. I've been more of a fundamental guy or on chain snipe, those kind of guys. If someone were
Yeah.
to start zero, like I'm sure a lot of your audience are on chain guys that are starting to go to check out Flow, TA a lot more. What kind of resources or materials you would tell them to start with?
So from a technical standpoint, I think it's enough to start, for example, with CryptoCred material. Has a very good. He has a very excellent YouTube channel where he went in the past with all these technical stuff, like how to trade levels, how to manage your risk, how to read candles, how to read charts, what are indicators, blah blah blah. Adam Arbitrade on Twitter has a very good course if someone wants to go into order flow. First of all, he has a very good free website called tradingright.com where one can already learn for free most of this technical stuff. But if you want to go deeper, he also has a course which is very well made. I would say that learning the technical stuff is important, but it's a very small part of the job compared to the psychological one. I think in a few weeks, one can learn anything they need to start trading technically, but then the biggest lesson they need to learn are mental. And they can take months, they can take years. It depends on willing to learn, the willing to transform the pain into learning. Because some people, I know many people who keep doing the same mistakes years after years after years, and there is no amount of experience that will just teach you if you refuse to learn. If you refuse to see the signs that, for example, you need to change something, or if you make the same mistakes and you expect different results, or if you don't take it seriously, if you don't respect the money, if you, I feel that in many of my years in crypto, all the people who I saw losing everything have been all people who have had no respect for the money. I think it's a very common pattern, whether it's on chain or on perpetuals or on NFTs or such. I think people who don't have a respect for the amount of money maybe they're up, for example, who don't realize how much it's worth it in real life, how much people could never make it by working, for example. They tend to gamble it all away more easily just because they don't have a respect for the how serious it is, how also lucky you are in a situation to be in a situation where you can make years of salary in 3 months. It's not a situation that first of all never existed in history of humankind, and even now it's a privilege that not many humans get to experience or have the skill or have the luck to experience. So I think if you disrespect that, you eventually will give back the money 100%.
Agree. Sorry. Someone in the chat is asking what are the materials because It wasn't that. Wait, 1 second. Crypto Cred,
Yeah,
and
so
what was the second one? Sorry.
The other one you can go, you can find, for example, on Twitter, you can find Arbitrade. Yeah, that Adam, that guy. Yeah, and he has his own also free website.
Let me just share.
Yeah,
This one, right?
You can. Yeah.
Okay.
You can definitely learn from the free material, or as I said, you can purchase the paid material. But I mean, again, I think people can start with the free one and just exhaust all the topics there and build a solid technical foundation.
Nice.
I think some people are easier to learn by reading. Some people are easier to learn by watching. So if you are more of a watching type, follow maybe YouTube from Cred. It's very well made. It's constantly actual. I don't think just because you don't look at the date. Maybe there are some videos that are a few years old, but this stuff doesn't change. It's the same. Yes. It's the same lessons.
Okay. All right. So good 2TA to start with. Any additional reading materials or stuff that you think is worthy of reading, following, or tracking?
Yeah, I think that the biggest challenge is learning the psychological stuff, the mental stuff of the game. So I can recommend some books which I read, and I recommend to anyone to read. Yeah. So one is Trading in the Zone by Mark Douglas. It basically, I will quickly explain. It helps to frame trading into a probability game, into splitting the psychological aspect of saying you are right or you are wrong on a trade, but treat it more like a probability game. So, for example, when you're in a casino at the slot machine, when you pull the lever and you don't win, you don't think I've been wrong. Like it's a probability game. You can win and you can lose, and with trading you should kind of approach it the same. Like it's not random. Like you need to do your study and you need to take a position thinking, okay, here I'm right and here I'm wrong, but if it goes against you, it's just a matter of probability. It doesn't mean that you are wrong and then kind of punish your ego or punish yourself for it, and then maybe go in on maybe a revenge spiral, revenge trading or stuff like this. It's a very nice book for psychological. The other one is more written more like a novel, but I think it has very important lessons, is Reminiscences of a Stock Operator. It's a pseudo-biography of Jesse Livermore. It's not a real biography, but it's mostly written realistically based on the documents of this large trader of the 1920s. So I think there is a lot of lessons there about really the psychology of the game, and also this guy lost his stock several times. So it's also about like restarting from zero, how to manage, to recover after big losses mentally, how to start again, how to trade in different fields, for example, because this guy started, then he went to commodities, then he went to other stuff, and then Wall Street crash in 29. It's been a big adventure. The last one is Mastering the Mental Game of Trading by Steve Goldstein. Again, I will not go too much in detail. I will not bore the people, but it's a book that helps with the psychology of, for example, dividing trading into 4 steps, which is, planning the trade, taking the trade, managing the trade after, meanwhile it's live, and then managing after the trade, like taking the conclusion and such, and then like resetting your mental mindset, so you start looking at a new trade with a fresh mindset. Like there is like these 4 different psychological moments, which the book goes into great detail in different chapters. So you see that, for example, many of the mistakes come from skipping one of these stages. For example, you skip the planning, or for example, you skip the managing part, or for example, you skip analyzing what went wrong after. So you immediately go after a loss, you go into a new trade without first analyzing what went wrong, and then maybe you just keep making the same mistakes. It's a very, very recommended book for me.
I'll definitely read that one. I didn't get into this one. Oh, actually, one lesson that you wish you taught yourself earlier.
One lesson that I wish I taught myself early was, well, actually, I would say don't trade perpetuals. Keep to spot. No, okay. I'm half joking. Like I actually think I still love the game. I think maybe I went into it too early. Like I believe it's a game that is best played after you hopefully cash out a good amount of money to be comfortable in life no matter what, like to trade from a comfortable position, because I think a lot of people trade perpetuals from the point of view of making a living, to making a salary, and it's such an additional stress, because then if you're not profitable, if you're not performing for several months, what you're going to do, no? Like it has additional stress, and people then cannot wait, for example, for good trades, because they think if I don't take trades this week, I don't pay rent. Yeah, this is completely wrong. It's a completely wrong approach. I think perps are not the devil, but I think they need to be approached from a comfortable position. It's more like a passion that you can have only after you already establish a solid foundation.
Nice. All right. I have one more question for every guest that comes on this show, but right before that, just wondering, do you have any questions for me or any other topics you want to talk about before we go to the last part?
I'm actually curious. Yeah. Shoot me the question. Yes.
What do you think is required to make it in crypto?
Oh, okay. So the one word answer for me is patience. I think too many people expect to have a Lambo and private jet in 6 months, and I think that just doesn't happen. I think incredible things can happen in this space if only people were more patient. If you wait for the good trades, if you wait for the good airdrops, if you test stuff without expecting immediately a return, if you try a new strategy and give it time to see if it pays, all this stuff, or for example, also trading spot and maybe waiting for your coin to do 100% move in a month rather than trying to squeeze 10% every time on perps. It's all these things. It's all a compounding game of patience. I think if people, for example, in the last 3 months, I took 10% of the trades I took in the previous months, because it's just a game of waiting. You wait for better trades, you wait for better conditions, you wait for more liquidity. Number one word for me is patience.
Okay, 100%. Thank you for your time today, then, Mr. Hart.
Thank you for having me. It's been fun. It's been a fun chat.
Do you want to come on a little bit more often to talk about the markets or views when it gets better?
Oh, I think we can talk about that after the new year. Sure. Yeah.
All right, bro.
Yep. Sure. Okay.
All right, guys.
Thank you.
Thank you. See you next time.